Okay, so any discussion about student loans and financial aid must include some discussion about the FAFSA, which is the free application for federal student aid. So, what is the FAFSA? So, the FAFSA, as the name implies, is an application. And so it is basically the starting point for getting loans, scholarships, and financial aid. And basically, you're going to have to put in your basic information like where you live, your age, your social security number, I believe, uh, your what schools you're going to be applying to, and also the financial means and status of you and your parents. So, that includes your income, your parents' income, your parents' assets, like what they own, their savings, what you own, what your savings are. And so basically it's kind of trying to size up your financial situation so that you can either qualify or not qualify for certain financial aid, and also the loans and all that kind of stuff. So it's basically in some ways a loan application. It's also a application for grants and scholarships and other financial aid. So one tip is to fill it out as soon as possible since there are limited funds available. So uh, they're first come, first serve. So a lot of the funds, like for grants and scholarships, it's limited per year, and so they allocate it as the applications come in. So the sooner your application comes in the kind of the cycle, the better your chances are of getting a particular grant or scholarship or financial aid. And so the cycle for FAFSA starts, I believe, in October. You should verify this, but basically, you should fill out the FAFSA for the year that you're going to be attending school at the earliest point in the cycle that you can. And I believe that's in October for the following academic year. So the sooner you can be in the application pool at the beginning of the cycle, the better. Okay, so once you fill out the FAFSA, the schools that you choose to apply to will take the information from the FAFSA and they'll put together a financial aid package for you. And this will include offers for grants, scholarships, and student loans. And it's all based on the cost of attending that particular school. So, once you get accepted to a school, you'll likely get a letter of financial aid that will specify, kind of the financial aid package that you could expect from the school. Okay, so just a few tips on how to fill out the application. So the goal on the application is to minimize your income and assets that you're going to show on the application, and of course within the bounds of the rules. So uh, you know I'm not saying to misstate anything or to falsify any information on the application, but there are certain rules you can take advantage of to kind of minimize your income and assets, because the lower your income and the less assets you have, potentially the more access you'll have to grants, scholarships, and federal student loans. So you, within the bounds of the rules, want to try to kind of minimize your income and assets. So how can we do this? So if you're a parent or you're a younger person advising your parents on filling this application out, you do not include your primary home, retirement savings, or business assets when you list the assets that you own. So if you didn't know this rule, a lot of times your primary residence, the house that you own, is your most valuable asset. So if you listed it on your FAFSA, you're going to be having a higher amount of assets than you necessarily need to, because the rules of the FAFSA allow you to exclude these categories of assets: your primary home, any retirement savings like 401k or IRAs, and business assets. So if you're a small business owner and you own a restaurant and you have $1 million worth of fixtures and equipment in the restaurant, you technically own that, but for the purposes of the FAFSA, you would not include those business assets. If your parents are divorced, or you're a parent who is divorced and you're filling the FAFSA out for your kid, uh, you just list the income and assets of the parent that the student applicant is living with. So even if both parents are kind of financially involved in the student's life, it's the primary uh, place where the student lives where you're going to list the income and assets of that parent, not both, in the case of divorced parents. Okay, so when it comes to you, the applicant student versus the parents, the assumption in the application is that you will use 20% of your assets towards education, and the parent will only use approximately 5%. So, in order to minimize the total assets available, if you own or if there are certain accounts in your name as the student applicant, it may be worthwhile to transfer those assets to your parent before filling the application out, because those same assets will be counted for less if they're in the parent's name versus your name. So it's worthwhile for whatever funds are practical to do this to transfer them to your parents. If parents have debt that they can pay down with assets on hand, then that's part of their financial plan, and it wouldn't really affect their financial plan too much. It may be worthwhile to just pay down debt using, let's say you have $100,000 of debt, but you have $50,000 of cash just sitting in an account. Instead of having to report that $50,000 in your FAFSA as an asset, you can just take the $50,000 and pay off $50,000 of debt, if that is kind of okay with your financial planning overall situation as the parent. So in that case, you wouldn't have to report that $50,000 worth of assets on the FAFSA, and you still got the benefit of it by paying down that equivalent amount of debt. So, paying down debt could be part of your strategy before filling out the FAFSA. Small business owners, just in general, have the opportunity to plan for the FAFSA ahead of time to maximize the benefit. So that's a whole different topic. And if you are a small business owner and you have kids that are potentially heading to college soon and you want to plan for the FAFSA, it may be worthwhile to get in touch with the financial planner to discuss what the best strategies are to do that. Also, grandparents can fund educational accounts since their assets are not included in the FAFSA. So if you have grandparents that are involved kind of in your financial life, they may be good avenues to fund educational expenses because they are not included in the FAFSA application. And so the FAFSA is a government kind of application because it will affect your kind of federal student loan eligibility. Um, but private schools, they want to actually get a more complete picture of your finances than just like. So basically, public schools will just use the information on the FAFSA, while private schools will use the FAFSA, plus they'll have their own separate information, and it's called a CSS profile. Usually, I think that's the common one. And some of the tricks mentioned above are closed by the private schools. For example, the CSS profile requires you to report both the parents' assets if they're divorced, while the FAFSA does not require that. So, the private school is kind of closing some of the loopholes, because they want to maybe have more information when they put together the scholarships and grants that the university is providing, as opposed to the federal grants or scholarships. Um, and so because of this, you may actually get more aid for attending a public school versus a private school, because again, the public school is only going to look at the information on the FAFSA, while the private school is going to take the FAFSA information and add this other information from this separate application. So you may actually get more aid going to the public school. So not only are you getting cheaper tuition, you may also get more financial aid. So again, that may even further tip the balance in your decision to attend a public school if you had the choice between public and private. Okay, so now let's just talk specifically about student loans. So again, I mentioned that there are different types of financial aid. There's grants, scholarships, and of course, there are loans. And so with the loans, you're gonna have to pay them back by after you graduate. So what are the different types of student loans? So there's federal student loans, and so the federal loans will be part of your package of financial aid, which include grants and scholarships. So, the federal loans will be part of this total financial aid package, and the maximum is $12,500 per year for undergrad and $20,500 for grad school. And so this is the max amount that you can take out in the federal loans per year. And it's going to depend on the tuition and your financial status of your parents on how much federal loans you're going to get. Because let's say the total cost of attending is 30K, and your parents, just based on the FAFSA application, are able to contribute, are expected to, between you and your parents, 20K. And let's say you get 5K in grants, that only leaves 5K balance in this particular year. So even though you're eligible for 12,500 of loans, you may only get access to 5,000, just based on the tuition cost and these other factors of your aid. So uh, this is just the max. Okay, so the federal loans are preferable because they are cheaper and they have lower interest. That's essentially what cheaper means in the most basic sense. They're just going to be lower interest rate, and they also have more flexible payment terms than the private loans. For example, they offer deferred payment while you're in school, and then even after you're out of school, there's other repayment options that are flexible based on your income and such. And so there's different types of federal student loans. There's direct subsidized and direct unsubsidized. And so the direct subsidized have the best terms. There's no interest while you're in school, but both will offer lower rates and better terms than the private loans. And so, you basically have access to different amounts of these. And, once you kind of put in your information in the FAFSA, uh, it may be worthwhile to look at the details of like kind of what you're eligible for these two types. But of course, you want to max out the direct subsidized. That's the best uh, terms for a student loan you can get. There's also the Direct Plus, which is loans for students' parents. So the parent basically takes on the loan and uses the funds for paying for their child's education, but the loan would be under the parent's name, while these will be under the student's name. Okay, and then we have private loans. So, due to the limits on federal loans, we talked about this max here, and the high cost of education, especially private schools, many students often end up having to take out private student loans. And so these are less optimal because the interest rates are typically pretty high compared to the federal, and the repayment options are also less flexible. But often, just to pay for school, students, this is kind of the only option that's left over to take out private loans. So again, there's a lot of finance here. To pay for school is a big financial investment. So again, I can't emphasize how much that doing some planning ahead of time to figure out kind of what the payoff is going to be, essentially. If you're going to end up being 200K in debt by the end of it, and let's say your job is only going to pay you 50K, and you're going to have whatever, let's call it 35K of expenses just to live your life, you're only going to have 15K left over to pay off your debt. It's going to take you a long time to pay that off. So, this might be if you're, I don't know, a social worker or something, and you're going to a private school to have studied social work. This could totally be a feasible scenario. Um, However, if you have the same 200K of debt and you studied computer science and out of school, you're going to make 100K. let's say you're gonna still kind of be on a budget here, and it's gonna leave you, what is this, 65K left over to pay off your debt. So just after a couple years, you'll be able to just, if you really are focused on it, you could potentially pay off, a lot of your debt. Of course, if you're making 100K, you may end up inflating your lifestyle and not saving so much. And of course, these numbers are totally just, I just pulled them out. But basically, as a engineer or a computer scientist or a business, accounting major, whatever it is, you're typically going to make more than working as an English tutor or like a social worker or something. So, nothing wrong with those professions, but if you wanted to go into social work, maybe you don't study at a private school. You go to community college for 2 years, and you transfer to a state college, and you'll come out with far less debt. So there's just some planning. I'm not advocating one particular career pathway versus another, but you should just make sure that there's a financial plan for it and everything is proportionate in terms of the expenses and the income on the other end of it.